The Aussie house price warning. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from news.com.au written by Tarek Brooker discussing a dire warning for Aussie house prices as the market continues to grow despite the pandemic. Yeah, well, it seems like we have a two-speed economy here in the housing. You compare housing to apartments, it's different stories. So let's have a look at what he has to say here. So we were warned house prices could drop by a whopping 32%, but they stayed firm. Now there's a stark warning about what could happen next. Now, that's true. We were reading this. CBA was warning for 32%. The banks were warning. RBA was modeling a 40% crash. This isn't just Martin North and others who are concerned with how much is going into property. This is from the big boys. Now, the further we go on, the more I suspect that was done on purpose to encourage our political leaders or to give political, to change the political environment to such an extent that the Conservative government would have justification to stimulate the economy at insane levels. Maybe I'm just putting a tinfoil hat on and getting a bit too cynical in my old age. What do you reckon, guys? Do you think it's done on purpose for propaganda? Because remember, we've got a Conservative government, the same government that criticised good old Ruddy when he was just, stimulating the economy significantly. Remember the building education revolution? And if we have a look at the impact of our education scores, chucking money at something magically, just throwing money at something doesn't make it better. It's funny. Funny that. So, when outsiders think about Australian culture, they might think of laid-back people defined by sun, sand, and backyard barbecues. But amid the widely held stereotype of Aussies, there's a part of our national identity that's often overlooked, our nation's collective obsession with housing. Do you think that's true? Is it becoming more widely known that Australians are obsessed with housing? I'll do that as a poll, actually, on the channel. I'm doing daily polls, and I'll do a review video in the weekend to see if we're seen as... Because Australians, we're not laid back. We're one of the most litigious societies in the world with all the bloody rules the nanny state puts on us. But everyone thinks that Aussies are laid back, probably because we don't care. We're politically apathetic, I'd say, in many ways. But we're obsessed with housing. That's so many courses and so many spruikers and so many people are selling you to get into housing. And you can't blame people for thinking it's the only way to make a crust. Because you're working, you're taxed to the hilt, you've got to drive to it, you've got all these costs associated with it, and what incentive is there to start a business? You've got all the red tape then the government puts on you, you've got to jump through all the hoops, employing people, there's a whole lot of red tape and hoops you got to jump through. When you just chuck it in a house, don't worry, she'll be right, mate. 7 years, Bob's your uncle, double your money. Cha-ching. Government won't let it fall. They'll just sell out future generations. From our airways being filled with content like Selling Houses Australia and Location. And I honestly, I don't watch TV. I unplugged it at university when I moved into my own place. I never bothered plugging a television in. I haven't done it for so long. But when we'll occasionally go to my mother's house and the kids will have the TV on and I'll see these reality shows. I can't even watch them. I can't stand them. To the millions of trips made by Aussies to the local Bunnings every month in order to spruce up their home or garden. There are a few things that can grab our attention as much as our homes. Or hammer barn as it's called. When the coronavirus pandemic first began to impact Australians in March last year, concerns about potentially large drops in housing prices quickly began to build, as the true scope of the crisis became clear. In April, SQM research concluded that if a worst-case scenario occurred for the economy and lockdowns lasted for 6 months across the country, a 30% drop in housing prices will be on the table. In May, the Commonwealth Bank followed by warning that a prolonged downturn could result in housing prices falling up to 32%. Yet here we stand, more than 8 months after those downside predictions were made and housing prices are significantly higher now across much of the country. But how did Australia go from facing down potentially the most devastating house price crash in more than a century, to raising speculation of a nationwide housing price boom. In short, the Morrison government, Reserve Bank, and banking regulator APRA threw an entire Bunnings worth of kitchen sinks at supporting the property market. I'd say they chucked the laundry sinks as well. And this is the thing. This is the issue. You've got people apparently becoming disenfranchised with institutions and our politicians, and they're getting frustrated. Now, for younger people, what faith would you have in your political leaders if you want to get into housing? What faith would you have? If they're doing all this intervention to prop it up, when there's the one chance, 1 in 100 years, essentially, event of a correction, and you need corrections to the market. You need it. It creates opportunity. You need the idiots who've over-leveraged themselves to feel the pain and learn the lesson. Because life isn't fair. It's tough, guys, okay? I assume that was just common knowledge. Maybe that isn't common knowledge. We've this year, because of everything that's going on, we're doing our house. We've sent Mina to a local school. So she's going to a day school, not the distance ed where we've done it. And she's, finding it, coping with it. She's, seems to be enjoying it. She gets a bit bored sometimes. But one thing she said, the teacher was explaining to her how, let's imagine if everyone was nice to each other and the world was all peaceful. And she's sitting there, a little cynic, going, that's never going to happen. That's crazy. So I think my job as a parent is done. But here's the thing. How many people want a correction in the market? How many people don't? It feels nice when you look at your property and go, oh, look at that, 50% growth. Fantastic. I'm such a brilliant investor. It's called luck. In cooperation with APRA, the banks allowed more than 493,000 mortgages to be deferred, with over 118,000 mortgages still deferred, according to the latest data. Now, we've got to realize all of this is not free. There's a cost associated with it. And we will bear the burden of this. Future generations will bear the burden of this government intervention. This is the thing. The government can't intervene without there being a price. Now, people are arguing that the intervention is worth it because the impact of the correction will be so drastic that we couldn't face it. But sometimes you need adversity to come out stronger. What about all those people who made stupid financial decisions, who've leveraged too far? They're not going to learn. But Florian, people might suffer. I know. That's the thing. You're always going to be the bad guy. There's going to be no political will to allow the market the freedom that it needs. And future generations are going to pay that price. Will, here's a question to you. Do you think there ever will be the political will here in Australia? Look what happened to Shorten when he tried to get rid of negative gearing. Now, I didn't like the fact that he was just getting rid of it for future generations, not for everyone. And he couldn't even pull that off. Now I appreciate the danger it causes because it artificially steers money into housing rather than other parts of our economy. So you've got the candle-on effect increasing the money supply through there, and it fuels the bubble. And then it flows through to other issues. You wonder why there's no wage increases in Australia, guys? Why our wages are down the toilet? Because why is there incentives to start businesses that demand workers, that increase competition for people, for skills, when you just chuck it in houses? What's the wages of carpenters and people who work in housing? How much has that increased over the time? What about real estate agents? Well, it depends if they're any good. The Morrison government committed to $507 billion in stimulus policies encompassing JobKeeper, job seeker supplements, among others. And we nearly had 9% of those employed in Victoria on JobKeeper. Just think about that, everyone. At the same time, the RBA committed up to $200 billion in near free 0.1% interest funding for the banks at a time when bank funding costs were spiking due to rising risks in financial markets. To put these measures into perspective, the entire Rudd-Gillard global financial crisis era stimulus package was $51 billion spread over 4 years. So they've 10x'd it, pretty much, in a quarter of the time. See, we're not in a normal market here. But where does this leave a property market that has been protected by a wall of more than $700 billion in support committed by the RBA and the Morrison government? There you go. The sheer scale of support for housing prices led property analyst and SQM research managing director Lewis Christopher to conclude the government, will never let a housing crash happen in this country. Or, here's another thing, it'll be a constant game of passing the parcel to the next mob. You know, here you go Labour, here you go Liberal, here you go Labour, here you go Liberal. It's the same thing. While the forces deployed to protect housing prices are indeed vast, there are also a number of rising risks on the horizon after a year defined by the so-called extend and pretend economy, also kicking the can down the road. Rates can only go up. With the RBA cash rate at 0.1% and global interest rates bouncing off the lowest levels in all of history, there is rising speculation that interest rates can only go up from here. In the United States, analysts are already warning of rising American mortgages, while the RBA is committed to keeping rates low for 3 years, using its bond buying program to artificially suppress interest rates. And they've said they'll pretty much do QE to the moon, as is necessary to keep the rates low. At the end of the day, it's the global bond market that is the ultimate decider of the direction of interest rates. As it stands, rate rises are seen as unlikely for Australian borrowers. But with many economists predicting inflation to rise, in some cases significantly, interest rate hikes cannot be ruled out in the coming year. This is the thing. What about when they tried to correct in the American market? What happened to the stock market there? And then, well, they couldn't normalize the rates. A bumpy road ahead. Despite a level of government expenditure that masks multiple years of World War II, look positively thrifty by comparison, there are still a number of economic indicators flashing warning signs. A survey conducted by lobby group Small Business Australia found that 415,000 small businesses were on the brink of going bust. If even a fraction of these businesses signalling distress were to close their doors for the first time, or for the final time, it's likely that the government's positive economic forecasts will be in jeopardy. Well, we have a significant decrease in the number of businesses that are bringing on external administrators. About half of where it should be for companies. Personal insolvencies are about half of where they should be. Now you think, okay, Florian, that's great. Less businesses are in trouble. They're managing themselves better. They just happen to have spontaneously gotten better at money management in our first recession in 28 years, and when the government is pumping so much stimulus into the economy. Do you believe that one, everyone? I'll have a shot of coffee. Let me know in the comments. So that's the worrying thing. So global trouble ahead. Meanwhile, beyond our relatively virus-free shores, the world continues to grapple with the pandemic. In Europe, EU leaders are warning that mutated strains of the virus will keep the continent in longer and potentially stricter lockdowns, with no clear sense of when restrictions will be lifted. In financial markets around the globe, market indicators continue to flash warning signs not seen since the peak of the dot-com bubble almost 2 decades ago, as a sense of market euphoria and a feeling that investors cannot lose due to central bank intervention continues to spread. There you go. Well, if the banks keep intervening, they're just going to decrease. You've got to ride the bubble to fight inflation. So life after the kitchen sink. Among housing analysts and economists, there is a growing consensus that the government and RBA's kitchen sink level intervention will not only result in prices not falling, but a house price boom in the months and years to come. But amid the housing market confidence, there are also risks ahead. From a slowing global economy due to mutated strains of the virus spreading across the world, to financial market contagion overwhelming the Morrison government's intervention in the housing market. While there is relative certainty that the RBA and Morrison government will continue to attempt to protect housing prices, the most sacred of sacred cows in Australian life, in a world increasingly defined by the unexpected, there's also downside scenarios where no amount of kitchen sinks will be enough. So Tarek Brooker wrote this piece. So what do you think, everyone? What do you reckon? We'll have to see. I mean, Fundamentally, it just shows you. That's the fundamental issue with this, is our government's eternal commitment to housing. Because that's going to have lasting consequences beyond this year and into the future, regardless of what happens to the economy. As always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon, support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.